Welcome, you're watching India Market Close. I'm Tamanna Inamdar and with me is Hersh Sayta. Let's begin with what's happening with the markets at their day's low. A bit of a bout of profit booking as we go into close. Yeah, I would say flat to negative. Bank Nifty weighing heavily, and we'll tell you in a bit why. HDFC would be the culprit over there. But you are seeing a tumultuous sort of a close. And perhaps it's closing off of positions, squaring off of positions ahead of the weekend. But a bit of nervousness seems to have set in. We'll pull up Europe also in a second to look at what indicators are coming there. But first, the heat map. And let's look at what the big contributors are to the kind of push on the Nifty today. So your entire FMCG pack, Nestle, Britannia, both about 2% down. Is it the Dabur overhang? Dabur, remember, had its business update out today, talking about how rural economy and rural consumption still looks a bit pressurized. And of course, you have your banking pack. HDFC Bank, again, business updates don't look as good as they did perhaps when they first came out. The first couple of lines, deposit growth seems to be a concern. IndusInd also down, and HDFC Life also seeing a lot of pressure. What's on top? IT is having a good day. Just a few days ahead of the numbers, you've seen IT doing fairly well today, and TCS up about 2%, LTI, Mindtree, all of them actually. Infosys also up smartly. Brokerage notes indicating that it might not be as bad a quarter for the IT pack. Let's look at the contributors to the Nifty, if we can pull that up, and then advanced decline ratios to see what really is weighing down on the Nifty today. And there you have it. You have Sun Pharma as a big way, but HDFC Bank as the biggest one over there. HDFC Bank, Kotak Mahindra, they're really putting in pressure, and Bharti and Sun Pharma there on the other side. It's a very, very clear trend on this side, on the green side of the bar, and you have TCS, Infosys, and as the top gainers over there, apart from L&T and HUL. Advanced decline ratio, and we'll see what kind of a trajectory we have seen through the day. And look at that. You started with a fairly positive morning, and it was looking like you're going to see an uptrend like yesterday, but the mood has soured. It is picking up now. You might see maybe some buying coming in. We'll have to wait and see what happens there. I'm just going to quickly look at the broader indices before we come to Hersh for the stock-specific action that we've been seeing. And yes, the Nifty mid-cap 100 also sees a bit of the mood souring. Let's look at what's happening to the small cap. Yeah, I would say trending towards a flattish kind of a trend. Quick Europe check on what's happening. Remember, even though US Qs were mixed, Europe was up yesterday. Well, not on opening, not right now. Europe is seeing a fair bit of pressure coming in. Perhaps there are some cues over there on what's happening in closing trade right now. But what are the specifics that you're spotting this afternoon, Hersh?
Well, yes, let me first start off with the likes of the power stocks doing fairly well in trade after we got clarification with regard to ROE tweaks which will happen starting FY25, and the likes of an NHPC, we saw good solid buying happening there, and that's happening since the morning, largely also on the back of strength that the stock saw yesterday, a block deal that the stock saw yesterday, as well as Wednesday, when the stock really when there was a new order win which NHPC received, and on the back of that, that one is up and away, around 4.2% higher in trade as we speak. Shree Cement, certain tax issues coming up for Shree Cement, and therefore the stock really falling sharply. 5% fall, 4,000 crore odd is the impact, largest impact on Shree Cement. You also have the likes of an HDFC Bank, which Tamanna did speak about, but the deposit growth seems to be lagging the loan growth, and quite sharply lagging the loan growth, which is why you're seeing that sharp cut, 1% lower on HDFC Bank, and that's dragging the Nifty Bank as well. If we can have that and the Nifty Bank contributories rather than the Nifty Bank itself, it will reflect on the Nifty Bank, which is 0.5% odd lower.
Yeah.
And if we can have the contributories very, very quickly, it will reflect there as well. There you go. Even within the contributories, you're seeing HDFC Bank down 1%.
Yeah, but look at Bandhan.
Yeah, Bandhan has also fallen off a cliff. You're right.
Yeah, Bandhan is having a bad day. So give me an idea, because you're tracking this closely. We've seen a slew of business updates come in today across the financial space. Is the overall story looking a little worrying, or there's nothing too clear from there?
Not really, Tamanna. So overall, it seems that loan growth is quite solid, continues to remain quite resilient on a higher base, as I must say. But the other piece that's really needing to catch up is the deposit growth. The loan to deposit ratios have really shot up dramatically. Bandhan Bank's loan to deposit ratio is surplus of 95%. And that's reflective. Even HDFC Bank's loan to deposit ratio is quite high. So that will start capping growth, which seems to be, possibly the concern within the market as well. And we were speaking with the banking analyst just 10 minutes ago. And that's something he flagged off as well, that deposit growth needs to start playing catch up.
All right, so deposit growth might be an area of concern, but let's welcome Nagaraj Shetti, Senior Technical Research Analyst at HDFC Securities, on the show today, as well as Avinash Goraskshakar, Director Research, Profitmart Securities. Welcome to both of you. Great to have you on NDTV Profit this afternoon. Nagaraj, let's begin with the levels and what you're seeing happening on the Nifty and the Bank Nifty. It's flat. I wouldn't say it's doing very badly. It's flat. Do you think a bit of profit booking pressure coming in? Where do you think the support is?
Hi, good afternoon. Rightly said, the market is facing stiff resistance around 21,750, 800 levels. And what we are seeing is, despite the sustainable upside bounce of last session, market is feeling some selling pressure at the higher levels. The overall trend, long-term trend remains intact for the market. I'm expecting 21,850 is going to be the strong resistance for the market. At the same time, I'm not expecting any bigger decline from here. Market is likely to consolidate further around within a range of around 21,500, 21,450 at the lower levels and 21,800 odd levels at the higher levels. If it breaks 21,500 levels, we could see a Nifty finding support around the next support of around 21,000 odd levels, which is a 20% 20-day EMA. So overall trend remains choppy for the market. There is a possibility of some consolidation moment continuing, and at the same time, a stock specific action will continue.
I will come to you on the stock specific, and if you could actually tell us what would be your play at this point, Nagaraj, along with your Bank Nifty levels. That's for you. Yes.
Bank Nifty is also similar kind of a thing. Yesterday, we have seen some convincing upside bounce. That bounce seems to have failed. Bank Nifty is currently down by 0.8%, which is not at all a good sign after the upside bounce. I'm expecting this consolidation moment to continue at the lower levels. 47,400 to 47,000 is going to be the support for the Bank Nifty, and I'm expecting upside bounce from the lower levels. A net-to-net range bound moment or a consolidation moment is expected in banking sector as well at the higher levels. 48,500 is going to be the strong support for the banking sector.
Right. Thank you so much, Nagaraj, for that. Avinash, let me go across to you. What we're seeing today in markets seems to suggest that there's some amount of weakness with regard to the banks. How are you viewing this weakness? Justified, not justified? Most market participants seem to suggest that the banking sector is something which is looking like a pocket of value. What's your sense on that? And what's your sense on overall market valuations?
Yeah, I think, Hersh, good afternoon. See, first of all, as far as the banks are concerned, I think one thing is very clearly visible in all the business updates by, mostly all the banks, specifically the private as well as the, PSU banks. Clearly, what has happened is that the CASA ratio has come down. So there's going to be a war for deposits going forward, and cost of deposits is going to increase. So I think that is going to put some pressure on the yields and margins going forward. But I think overall, the opportunity looks quite promising. I think October to December is a busy season for credit growth, and I think that is already reflected in the disbursement numbers. So I would not be surprised that on an absolute basis, you could see numbers improving quite significantly. and obviously the margins could be under some sort of marginal pressure. And if deposits are hard to come by going forward, then I think you're going to see this margin pressure increasing, and that is what has upsetted the sentiment for the banking stocks in the near term. But on a very macro basis, I think banks would continue to do well. With corporate India capex doing well, government announcing a lot of infra projects, I would not be surprised that the credit growth could remain in the range of 8 to 10%, and that could benefit larger players like SBI, Bank of Baroda, or even a private sector player like Axis or ICICI Bank. So I think in the near term, the sentiment is going to be slightly patchy. You could see a little bit of underperformance, which is clearly reflected in today's bank Nifty kind of performance. But overall, I think numbers on a fundamental basis would come out quite well. On the broader market, I think now the markets are all waiting for the Q3 earnings numbers, which are going to start from coming week onwards. I think, narratives have played out for a very long time, but I think now the markets would be looking at hardcore data points coming out after Q3, what are the commentaries coming out from the managements. And I think once the result season starts, you could see a lot of stock specific activity, because on an index level, I personally believe that, we may be a little, stretched out, and maybe on the index level, we may not see a very major upside. But broadly on a stock picking basis and on a stock specific basis, I think the result season will be a key trigger.
Yeah, absolutely. Avinash, hi, Tamanna here. Just keen to know how seriously or how closely you're watching all of these business updates coming in. And have you changed your mind, or what are you thinking of the IT pack, which is absolutely stellar today on an otherwise fairly dull day?
So I think, Tamanna, frankly, we have been telling our clients to nimble into, companies like TCS, Infosys, KPIT Technologies, because we believe that a large part of the negative has already got factored into the price. And I think we believe that, the Jan to March quarter would be a clear reflective quarter, because December is a cold month, as all of us are aware. So I won't be surprised that the December quarter may not show any big positive surprise, but the commentaries which come out, after the Q3 numbers would be very interesting to watch out for. Although one point is also clear, that none of the companies have announced any multi-billion-dollar deals. So I think one will like to know after the third quarter, what is the commentary in terms of new client additions, in terms of the growth commentary. My sense is that, at these levels, there's nothing much to lose. And I think companies like TCS, or for that reason, Infosys or a KPIT Technologies, these are companies which have got very solid businesses, a lot of cash on the books. And I think it's a matter of time, possibly in the first half of 25-26, you could see a lot of these companies bouncing back. So, the point is, today the markets are going, possibly favoring the IT companies because everything else is falling. But growth will definitely come back, by September, October next year. And hopefully, the US market is responding also positively. So I would believe that, these are very good opportunities, provided one has got at least a 12 to 15 month kind of time frame in mind.
Very interesting views coming in from Avinash. But, thank you so much for that. Let me quickly go across to Mihika, or rather, lots of stocks buzzing. Let me actually go across to Mahima. Lots of stocks buzzing in trade today. Mahima joins in with a list of volume buzzers.
Right, Hersh. So I've picked up 5 top volume buzzers today. The first one is Endurance Technologies. The volumes is up over 9 times its 30-day average, and it is hit an upper circuit today at 20%. And this stock has risen the most in past 4 years now, and the stock has gained 50% in the past 52 weeks. This is because the order book for Q2 has been it has been strong, and it has been consistently increasing as well. And the profits for Q2 have risen by 36% year on year. Now, next stock that was buzzing today is Sula Vineyards, where volumes were up over 9 times its 30-day average. It did hit an intraday high of 14%. 1-year returns of Sula has given 73%. And what I believe is what is working for Sula is its wine tourism and its premiumization strategy. The third stock that was buzzing today is Trident Limited, where volumes were over and above 6 times its 30-day average. It touched an intraday high of 8.6%. Now, this is on the back of multiple block deals that have taken place for this company. Total shares traded today were over 10 crores, so that's 2% of its total outstanding shares, and the highest price at which the shares were traded was 41.6. Then we have Century Textiles, where volumes were traded at 6.4 times its 30-day average. Intraday high of 7.3% was touched, and this is after its investor presentation that came out yesterday, which showed an acceleration in its property projects. And lastly, we have GE Power, where volumes were about 6.2 times its 30-day average, and it did hit an intraday high of 14.5%. Now, as you rightly mentioned, Hersh, before that, all power stocks have been buzzing due to the draft tariff regulation by CERC that has allowed higher ROE for hydrogen-based projects and pump hydro projects, and GE Power supplies pump hydro projects to power project developers. So these were the top 5 volume buzzers of the day.
All right. Let's quickly go across to Nagaraj, Shetti. Any of these on your radar? Endurance Tech, Sula? And, let's also take your ideas before close today, Nagaraj.
Yeah, hi. To speak about endurance, what you have seen is exceptional upside breakout today after a gradual up move over the last few weeks. This stock has made a high of around 23.18, 23.20, 23.15, 23.18 levels today. I'm expecting some more consolidation as it has moved up sharply recently from 1650, 1700 to 2300 levels, which indicating that less amount of risk and reward ratio at this point of time. I'm expecting some more consolidation or a minor chances of minor profit booking in this stock.
Absolutely. I just quickly want to go across to Avinash on another very interesting report which was out today by Nomura, which expects the Nifty to hit 24,260 in 2024. Talking about disinflation, fall in yields, among other things, oil and commodity prices. I know we're going suddenly macro in the middle of this conversation, Avinash, but I just wanted to know if you had a take and are sharing this kind of an optimism.
I think my guess is in an election year, Tamanna, this is very much possible because, post the 22nd January inauguration of the Ram Mandir, there are market expectations that the electoral strategy might be announced by Modi government. And after that, there could be a kind of a sustained rise. And I think, the government would leave no stone unturned to ensure that the first budget which comes after the election would be a kind of blockbuster budget. And I think the macros have also improved quite significantly. Corporate earnings are also expected to do well. But I think to give you an assertive answer whether we touch 24,000 or not is a difficult, call. But yes, I would not be surprised that there could be a lot of activity in the broader market, which I think, you would be seeing because a lot of liquidity is coming to the market, both from the FIs as well as domestic SIP money is now getting increasingly bigger. So I think, this definitely is a buy on decline market. And I think we should attain higher levels as we go forward.
Right, very interesting views coming in. But on that Nomura note, what are they bullish on, Tamanna? I'll quickly take our viewers through that. Overweight financials, particularly banks, is what they suggest. Healthcare, consumer staples, infra. Within infra, cement, power, coal, oil and gas, and telecom, all of which they are overweight. Underweight on consumer discretionary, durables, capital goods, defense, metals, internet, and IT. We've spoken about Nifty IT.
Yeah.
And they're selective on autos. With regard to their picks, ICICI Bank, GCPL, M&M, L&T, Reliance. The 5 big ones is what they're super bullish on. And top picks within the small mid-cap, Coforge, which is within the IT pack, by the way. MedPlus, Federal Bank, and Sansera are some of the other names within the small and mid-cap space which they are bullish on.
MedPlus is feeling a lot of pain today, just by the way, the entire pharma pack is. But interesting that they're also talking about HDFC. I mean, all of your financials and a day when HDFC is saying, obviously that's a longer term view. But I want to go into IT just for a bit, and we have Tushar joining us because that's going to be the big story all of next week. At least towards the end of the week, you're going to get the big ones, because ahead of Q3 earnings, the Nifty IT has declined in 2 out of the 5 trading sessions. And next week on Thursday and Friday, the action begins with all the major IT companies giving out their quarterly numbers. Tushar has the IT barometer for you. Tushar, what's the IT barometer and where does it range right now?
So Essentially, thank you, Tamanna, first of all. So the barometer is actually somewhere in the middle, if you want to say. So given the week that we have, 3 days of increases, 2 days of declines, shows that it's going to be a mixed bag. The earnings, however, will not be that... will not be a mixed bag, it will actually be subdued. So what we're getting so far is that the net change in Nifty IT so far is about 2% this week. What we are guessing from the Nifty IT is that it's seeking a level after the December bull run that we saw, and especially after Citi raised the target prices, which was still below the current market prices. So essentially, we can say it's correcting to those levels. What to expect from the Q3 earnings? Muted earnings when TCS and Infosys present their numbers on January 11th. Q3 will remain subdued. 2024 picture is the key focus area. So when the companies give out the commentary, what we have to look for is the 2024 demand scenario and how deal making is shaping up for the rest of the rest of the year. Profitability is in question for Q3 because they have very few margin levers left. Remember, Wipro and Infosys gave out wage hikes in the third quarter around in the month of December. So, Tamanna.
All right. Thank you for that, Tushar. Just before we go to the break, a quick word from Nagaraj on the IT pack. Nomura likes Coforge, do you? Or are you already seeing a big run-up? Any views over here, Nagaraj, as per
Yes.
where the upside remains?
Yes, Tamanna rightly said, IT is still looking positive for the long term, though we have seen some consolidation and high volatility at the higher levels, but the overall chart pattern, long-term chart pattern of the IT is still positive. I'm expecting this consolidation pattern is likely to end soon, and we are likely to see a good amount of upside traction once it's this index moves above 36,000 levels. I'm bullish on the major IT participants for the long term.
Any specifics?
Yeah, Coforge and Infosys, Wipro are the one which are looking positive at the lower levels.
Okay. Coforge, Infosys, Wipro on Nagaraj Shetty's list. We'll take a very short break, but we're coming right back. It's turning into a very interesting close. Can IT keep up its strength? Will we see a recovery? Some recovery actually in the Bank Nifty as well. So we're coming back with all of those details, including Nagaraj Shetty's BTST ideas. Don't go away.
Welcome back. You're watching India Market Close on NDTV Profit. I'm Hersh Sayta. With me is Tamanna. Now, a quick check on where we are, where markets are concerned. You're seeing a bit of a recovery in the Nifty 50. You're up around 1/5% or thereabouts. Nothing to complain about at all, Tamanna, given that we had a strong close yesterday. But what is fueling this slight bit of uptick that we're seeing at the moment? Let's take it to HDFC Bank, because that stock was down nearly 1.5% at its lowest point in trade today. It's since recovered, so that 1% recovery has led to roughly 30 to 40 points added on the index itself, and that's what's really being seen. So if you look at the contributories now, HDFC Bank at one point of time was contributing over 30 to 40 points negative to the negative point contributories. Now that has gone away. Only 13 points is what HDFC Bank is really contributing, and therefore you're seeing a bit of an uptick. And that similar situation is also playing out on the Nifty Bank. If we can have a look at that as well, the Nifty Bank also trading largely flat now when it was sharply lower earlier on in trade. Let me also, we also had the chance to speak to Bernstein senior analyst and Pranav Gundalapalli, who I spoke with about some of the trends that are playing out in the banking space. Let's listen into a chunk of that conversation we had with him with regard to all the numbers that are playing out, and especially with regard to HDFC Bank.
Sure. See, I think we've had the updates from HDFC and a few of the mid-sized and smaller banks as well. I think looking at for this quarter, I would say the credit growth still continues to be healthy across the board, right? I think both for smaller banks as well as the large banks, I think the credit growth is healthy. But the deposit growth is yet to pick up, right? You're still seeing incremental LDRs being extremely high across the banks. So deposits are increasingly becoming a constraint for a particular bank in terms of growth. So I think those are the two big updates or takeaways from the updates so far. But looking beyond this particular quarter, I think looking at the sector and over let's say a 12 to 15 month period, I would say a couple of other trends would be what we watch out for. The first is a pickup in corporate credit growth. I think this is long overdue. And this is one where the larger banks will benefit at the expense of the smaller banks. I mean, the larger banks will take a disproportionate share of this opportunity. So that would be something that we would watch out for. The second would be a potential rate cut in the later part of the year. I think that's where you will once again have the whole NIM decline becoming visible. For now, I think we are at almost a steady state in terms of NIM for the rate cuts that we've already seen, or rate hikes that we've already seen. But from here on, if there are rate cuts, you will see a bit of a sharp decline in NIMs. So those are the two big trends that we would watch out for the rest of the year.
In fact, sharp recovery in the markets as well. Decent recovery in the markets, I would say. Definitely off the day's lows. Very quickly, Nagaraj, any favorites in the banking space? I know we spoke about HDFC specifically, but otherwise, bankings, financials, anything on your radar right now?
Yes, looking at the charts, some of the banking stocks are doing really well. One of them is Axis Bank. If you look at the chartically, Axis Bank has been in a constant up move over the last many months. Technically, we believe higher tops and higher bottoms indicates the strength of the trend. Recently, we have seen formation of higher bottom around 1080-85 levels. And in the last couple of sessions, this stock has been moving up convincingly on the higher levels. I'm expecting this stock to move up towards the next overhead resistance of around 1200 levels in the near term.
Absolutely. Another sector that we should talk about and which has been buzzing is the realty sector. The realty index is off its highs but continues to trade with a positive bias. Anushi Vakharia is joining us now to tell us about two companies which put out business updates today, Sobha and Macrotech. Sobha not doing so well, Macrotech decently, but overall the realty space still keeping its chin up. Yes, Anushi.
Right. So two stocks. I'll start off with Macrotech first, wherein if you look at the volumes that were trading about 4.5x its 30-day average, while the company did report about a 9% intraday high, it has reversed from its early day gains. So just let's jump into the business update over here, wherein they reported about a 12% growth in their pre-sales at rupees 3,410 crore, while the collections, if you see that was a bit mixed at about 3% down at rupees 2,590 crore. The company did mention that they have added 3 projects of 2 million square feet in the third quarter. Now coming to Sobha, yesterday it was one of the top picks of Nifty Realty with the stock gaining about 15%, but it has erased those. It is down about 2% today. If you look at the Q3 update, it did mention that the total sales value was up about 37% at rupees 1,952 crores, while the average price realization was also 14% up. The new sales area also was up by 12.7%. So that was all on Sobha and Macrotech.
Right. Thanks so much for that update, Anushi. Of course, the realty sector really buzzing, 7% higher yesterday. It's still trading in the green, nothing to complain about, even in trade today. But before we slip into another short break, let's listen in to the management of RVNL. They spoke about the company's share of railway contracts, new projects, and pipeline. Here's what they had to say.
We have got an order book of around 65,000 crores. Slightly more than 50% is through the bidding. And we have got the proven track record in the railway infrastructure segments. So we are, our first target is the railway projects. The second is the metro segments. We are very confident because metro segment is one segment where the large number of cities, more than 52 cities are going to have the metros, and a lot of technical expertise are required. And presently we are working in the metro segments in 7 cities. So coming back to your question about the railway infrastructures, we are very keen. A lot of projects are likely to come in time to come. And the capacity augmentation projects are one of the projects where we are very keen to participate and bid and get from the market.
Right. So that was the management of RVNL, of course. And Tamanna, you were speaking with them.
Yeah.
Solid order pipeline, railway segment really buzzing. It's a multi-year cycle. How's it playing out? What sense did you get from?
So what was interesting is that they are so the margins for the company, even though their order book has been beefing up quite admirably, their margins have remained constant and stagnant at 6%. And so that was the question. Now, as they begin more projects outside the country, they have a project in Maldives, they're doing a project in Kyrgyzstan. That's where, the margins are going to bump up. Plus, they're focusing outside their trajectory of only railways. So metros is another thing. You can, in fact, watch that entire conversation on our YouTube channel with RVNL. You should do that because they rarely speak in so much detail. But we'll take a very quick break at this point. We're coming right back as we move into what's been happening in the F&O space and closer towards a market close, which seems not as bad as it did about half an hour ago. Stay tuned.
Welcome back. You're watching India Market Close here on NDTV Profit. We've seen a bit of a recovery in markets over the last half an hour or so. And, to try and break down some of the FNOQs that are coming through on the back of that recovery. Agam, talk to us what is the futures and options data saying about the markets, especially the last half an hour. Very interesting stuff happening.
Well, certainly a very sharp up move seen and perhaps some amount of shorts being squeezed out of the system. Pardon me. Considering what we have seen through the course of the day. Pardon me. Yeah. So, considering what we've seen through the course of the day, and we have seen an increase of around 2%.
All right, one sec. We're going to give Agam a second to just get his breath in. But yeah, you're absolutely right. Shorts in the system probably being squeezed out because you've seen a massive turnaround in just the last 20 minutes. And look at that graph moving up pretty sharply. So it's a tough afternoon for the shorts. Agam, you feeling better? Okay, short of breath maybe a little bit.
Yes, absolutely. So what's really happened is that we did see a lot of shorts building up through the course of the first half of the day. And at some point in time, we saw the benchmarks, move into the red. And since then, the Nifty has recovered very sharply. As far as the Bank Nifty is concerned, that is where the short covering is even more because the open interest has in fact declined as the index now moves into the green where it in fact spent the majority of the day in the red with substantial weakness coming through, but that hasn't been the case and it's now currently trending flat. Where does that take us when it comes to the option space at the moment? Now, we do have maximum open interest around 22,000. We know that there's been stiff resistance over the past many weeks when it comes to this particular level. But on the lower end, we're seeing a little more traction now building around 21,500, 21,600. And it's going to be a narrowing range. At least that's what's looking like at the moment, considering a lot of writing around those puts. When you consider the change in open interest, that's where it will be a little more evident that when you consider something like a 21,700, 21,600, we're seeing a little more call in writing activity as well. Let's talk about stocks then and take a look at what's really happening there as well. And for now, of course, a lot of shorts building up in the likes of Nestle, which of course went ex-split today. Shree Cement, Titan, along with Kotak Mahindra Bank, all of them under pressure. And we saw some shorts building up there as well. And about a short covering for Godrej Properties, which say for that, Delta Corp, Chambal Fertilizer, GNFC, as well as Gujarat Gas, all of them looking at longs unwinding. So the market breadth hasn't exactly been very encouraging. That said, the benchmarks are staging a recovery, but do remember that we are getting into a volatile week where we will start getting earnings from a lot of large caps, a lot of them from the information technology sector, and that's likely to keep volatility on the higher end as we move into trade next week.
Right. Thank you so much for that update, Agam. Take care of that throat. But let me quickly take it to Nagaraj. Nagaraj, interesting last half an hour of trade. What do you make of it?
Yes, of course, Nifty has recovered a bit from the lower levels. As I'm mentioning, I'm not expecting any bigger decline, even though market shows consolidation from here. There is a possibility of 1 or 2 days consolidation. Nifty could retest the recent swing highs of around 21,830, 850 levels in the due course of time. At the same time, from the higher levels, there is a possibility of weakness or a selling pressure emerging. So consolidation moment is likely to continue at least for 1 or 2 sessions before showing a further decisive move on the higher side. I believe that once Nifty breaks decisively above 21,900 levels, the next target would be around 22,200, which is going to be the 100% Fibonacci extension of major bottom analysis.
Right. Thank you for that. Avinash, if I can come to you, we spoke about RVNL just before going into break. This stock has more than doubled, 2.5x in terms of it's virtually almost a multi-bagger there in the last year itself. And when I'm looking at the last 3 years returns, it's really hit it out of the park. And so have a lot of these railway plays, if I can call it. Where do you see valuations in this space now? Huge order books. This one has an order book of 70,000 crore, a top line of 21,000 crore, 6% margin. How do you view some of these businesses?
No, I think, see, the runway for most of these railway infra companies is quite strong. In fact, as you rightly pointed out, Hersh, RVNL is sitting on an order book of almost 65,000 crores, both from railways and metro. And I think in terms of order book, situation, in terms of the revenue visibility, definitely, I think, the company is sitting pretty. But in terms of the EBITDA margins, I think probably if you look at other companies like RITES, or if you talk about companies like, Titagar or Jupiter Wagons, the margin picture is much better in these companies. So I think broadly, for any fresh re-rating, specifically for RVNL, one would like to see what kind of margin expansion happens, for the new projects which RVNL undertakes, because that is where the market would be looking at earnings growth, coming in. Overall, the opportunity size is very big. But in terms of the valuations, I think, it appears to be fairly priced now. I think at these levels, maybe the stock will consolidate for some time, and you'll have to look in at FY25 and 26 earnings numbers, because FY24 has been, fully discounted. The market is now looking at beyond FY25 earnings. And I think within the railway infra space, stocks like Jupiter Wagons, Texmaco Rail, these could be better bets, because I think there the opportunity is pretty large. The railway government, the ministry has already said that something like 7 lakh crores is going to be spent on the entire railway system. I think which includes not only the rolling stock, but even, railway stations, plus a lot of infrastructure benefits which are going to be rolled out over the next, say, 3 to 4 years. Yeah. So I think, this space, especially the wagon space and, consultancy companies like RITES could be better positioned. Although RVNL will continue to grow at this price, I would prefer to keep it as a hold. Fresh buying could possibly be suggested only at lower levels.
Yeah. And the railway space is definitely one which has shown a lot of, momentum. We've been talking on the channel and getting that policy perspective as well on the kind of huge spends that we expect to be seeing consistently. Railway finance companies like IRFC have also seen the boom in that sense. Nagaraj, anything over here that you still see potential in or is on your buy list?
Yeah, of course, I have 2 stocks. In fact, if I can give you the for the creation of a longs. First one is Finolex Pipe. If you look at the FinPipe, Finolex Industries Limited, this has witnessed a decisive upside breakout in today's session after showing a range-bound action in the last few weeks, and 225 was the apex point of the breakout, and we have seen upside breakout with rise in volume as well. Overall chart pattern is looking positive, currently placed around 237, 238. Immediate target would be around 250, and 225 is going to be the stop loss. And second one, Aster DM Healthcare. Chartically, Aster DM was moving in a range-bound action over the last few weeks, and today made an attempt of upside breakout of the whole range. The overall chart pattern is looking positive for a smaller as well as larger time frame, and even volume and RSI is also indicating positive bias. I'm expecting this to stock to move up further. Currently trading around 418. One can buy at this point of time. 440 is going to be the target, and 405 could be the stop loss for this.
Yeah, just on Finolex, would you recommend a buy even at these levels? The stock has already run up about 9%, Nagaraj?
Yes, of course. Actually, I have picked it up with half an hour back. It was around 232, 33 levels. Now it is 237. I'm expecting still it has a potential to move up. It can be used as a BTST candidate as well. The overall chart pattern is looking positive, and this is a fresh breakout, I believe.
All right, so Finolex is your top BTST candidate as well. A story coming in at this point on Bloomberg. The Indian Finance Ministry has told state-owned oil refiners it could halve a package of $3.6 billion aimed at supporting investments to manage energy transitions. Let's look at what BPCL, HPCL is doing. You're seeing a bit of a down move over there. IOC as well. Yeah, IOC is doing fine, about 1% up. You have seen a lot of movement in these counters because of what's happening with crude and the uncertainty building over there. Avinash, any views here?
No, I think my guess is, Tamanna, I think the market is fearing that, of course, the crude price, downside has already been factored into the prices of all these oil marketing companies like BPCL, HPCL, IOC. But I think come elections, and I think there have been some reports that possibly petrol prices could be cut by about 10 to 12 rupees a liter. And that definitely is not a good sign. I would be surprised if this decision does come in. Then I think that, obviously would create a little negative sentiment for these companies. My sense is that, I think IOC, BPCL, HPCL would be reporting very decent numbers considering the improvement in their gross refining margins. But if at all this decision of a petrol price cut is announced by the government, then I think that could be a little bit sentimentally negative. And I think we need to take this point into account because probably during election time or just ahead of elections, the government would like to appease, the public. And that is something which is not financially good for these companies. So I would prefer a hold. We'll wait and watch for the commentary and further developments, what happen in this sector.
Right, and Avinash, the other big piece that's playing out is also in the power space with regard to CERC's announcement on the new draft regulations. ROEs increased. What does this mean for the sector as a whole? And do valuations therefore now start to look reasonable because of that ROE expansion?
No, they would, but Hersh, I think for power generating companies, normally you look at the price to book multiple, and of course, improvement in ROE is definitely good for the business. But these improvements would take a little bit of time. You could see some improvement happening in the next financial year, that is FY25 onwards. So I think most of the power generator companies, especially companies like Tata Power, Adani Power, Torrent Power, I would not be surprised that the kind of appetite we are seeing in the market for power generation would definitely increase. So I think longer term, any dip in these companies could be a good opportunity to accumulate. And I think this sector is going to see massive growth over the next, say, 2 to 3 years.
Yeah, absolutely. Interesting report. We were just talking about the government trimming its budget that they've kept for oil refiners to transition to renewables. The reason they're doing that is because the fiscal deficit is likely to shrink as much as 70 bips. The target is to be set between 5.2 to 5.4% of GDP. Again, that's a Bloomberg report that is out just now. And if you want to sort of tighten the purse strings, then you need to cut costs from somewhere. The question is from where? Will the disinvestment target be upped? All of that is going to be on focus as we get into the budget mode. But before that, we're still a bit, I would say, in results mode, and we're looking at a very interesting sort of session Monday onwards. Nagaraj, you've given us your 2 top BTST picks, but what would be your strategy and positioning ahead of the weekend and ahead of what is going to definitely be a very eventful week?
Yeah, of course, one can look to buy for the short-term trader. It is definitely this volatility is going to provide a good opportunity for the traders in the near term. But as well as at the higher levels, I'm remaining optimistic once it breaks above 21,850 levels. Till then, there is a possibility of a consolidation, as I mentioned, and we could see some selling pressure at the for the short term at 21,800 odd levels. At the same time, 21,500 could offer the support. One can look to buy around the support and look to offload for traders. I'm staying at the higher levels.
Yes. Okay, thank you so much, Nagaraj, for that. Let me go back to Avinash. Avinash, 2 stocks that I want to take your views on. One is BEML. It's up roughly 8% in trade today. Of course, slew of new orders continues to build up. But again, I want to try and focus on valuations because the price to earnings multiple on this one is now 60 plus, if I've got that right. So that's point number 1. I also want to try and focus on HAL because that one has run away again today on the back of a UBS initiating note. Execution, the key part of that note in my view, is that UBS believes that execution will improve quite substantially over the next 3 to 4 years, which will, of course, have a knock-on effect with regard to revenue. But again, the stock has run up. It's a 11 bagger since 2020. What do you make of valuation comfort here, Avinash, from a fundamental perspective and from an overall business perspective?
So I think, Hersh, talking about Hindustan Aeronautics, I think clearly, the markets are looking at earnings visibility for the next 2 to 3 years. I think whenever earnings visibility gets more and more clearer, the market is willing to pay a higher kind of multiple for future growth. And that is exactly what is happening in HAL. My sense is, on the face of it, the valuations may look a little pricey. But if one were to look at FY26 earnings, which probably look pretty decent, I think that would be the right way to look at this stock. In the short term, the stock definitely looks expensive and fully priced. But I think if you look at the monopoly and the kind of business positioning it has, its recent order of the Tejas aircrafts, which it has got, is going to, obviously be quite landmark because overall the export market is also a big export market for this product. So my sense is that, over the next, say, 2 to 3 years, order book is assured, revenue visibility is okay, profitability is also going to get, better considering new product development, what they are doing. The same thing applies for BML. BML, apart from the order book, kind of lineup, there have been some earlier reports that BML could also be sold to a strategic buyer. Now, coming year, possibly, this, sellout or strategic sale could happen. It did not happen in the earlier years. But my sense is that markets are very positive on the fact that if BML is given out to a strategic buyer, I think that could be a very good re-rating kind of exercise for the company. And in anticipation of that, also some re-rating has happened. So I think investors who now have invested should at least wait for the next 1.5 to 2 years here, because, in terms of the risk reward and the alpha generation, I think it's now going to take a long time because the base has increased. And I think earnings growth will, obviously eventually happen after the next, say, couple of years. So you need to hold on for a longer time period here, since long-term prospects are good. But in the near term, the stock prices would continue to remain in a range.
Yep. Let me come to Nagaraj on some of those counters. HAL, of course, UBS report, BML, and let me add Jupiter Wagons as well, who also got a significant order from the Ministry of Defence, and that was the news flow which saw it doing quite well today, still up about 3%. But if you pull up the 1 month chart, and I'd be keen to see what Jupiter Wagons has done in the last 1 month, it's definitely on top of the news flow. What do you make of any of these counters, Nagaraj? Any of these that you like?
BML is the one which has been a continuous uptrend over the last many weeks, and chartically I'm finding some interesting pattern, higher tops, higher bottoms, and after a gradual decline, or what we can say is a range bound action, this stock has moved up sharply. The overall chart pattern is indicating a smaller declines and a bigger up moves over the period of time. RSI pattern is looking positive. We have seen the expansion of volume during upside breakout. I'm expecting this BML to move towards to 3250, which is the next set of resistance in the next couple of weeks.
Yeah. In fact, another space we should quickly talk about, and the news was these new CERC regulations, which will be positive for NTPC, Tata Power and the likes. Essentially, the ROE that the regulatory body sets, the return on equity for thermal power generation, looks like it's being kept steady till FY29, and that was a relief for some of these counters. You saw a fairly sharp run up. Avinash, you spoke briefly about the power sector, and as we bet on the India growth story, power is going to be the huge component over there. Are there any sort of toppers in that list of yours?
No, I think within the power pack, my sense is, we continue to believe that Tata Power, NTPC, Adani Power, almost all the power generators, Tamanna, definitely seem to be well positioned. If the ROE improves, obviously this is going to improve their financials and obviously lead to some further re-rating. And the best part is it's a supply-driven market. Supply still continues to be much lower than what demand continues to grow. And I think for the last decade, there was hardly any power generating capacity put up. Now with with the economy doing very well, and I think expectations that power generation both from the industrial and the residential segments would continue to grow quite strongly, I would not be surprised that at least for the next couple of years, I think the positioning of all the power generators seems to be very solid. I would be more positive on NTPC because NTPC is one of the oldest power generators in the country. would definitely benefit from its geographical reach and its thermal capacity. So I think, it's a call which investors need to take for the next couple of years. Although in the near term, these stocks may not do anything great. But over the next, say, 12, 18 months, my sense is that definitely power generating, companies would be the flavor. And NTPC definitely looks pretty attractive.
All right. Thanks so much for that, Avinash. Nagaraj, quick last question on some of these power names, NTPC, NHPC, as well as Tata Power. Your views very quickly. I'm sorry, we are slightly short on time.
Yes, Tata Power is looking well now, currently making an attempt of upside breakout. Technically, it was moving in a range moment around 335, 340 was a range resistance and is making an attempt of upside breakout. And technically, we believe whenever the huge range becomes broken out on the upper side, there is a possibility of continuation of an uptrend. I'm expecting this stock to move further in the near term.
Yeah, absolutely. NTPC definitely on the radar. IT stocks on the radar today. What a winning Friday they've had. Thank you so much, Nagaraj and Avinash, for joining us as we wrap up the first trading week of 2024, and it's not been too bad. I mean, we started off the week with the thought of have we seen too much of a run up in 2023? Is it time for profit booking, etc.? It's not been too bad at all. Key indices closing, looking like they're going to close in the green at the end of it. The Bank Nifty, the only loser, but has recovered. And just, we should pull up the Nifty chart and look at it through the day. What a smart recovery we have seen over the last half hour or so of trade. Right from here, you saw a pretty smart recovery the last half hour or 45 minutes odd of trade coming in on the Nifty. Clearly, short covering in play over here ahead of a weekend and ahead of a week that is going to be completely action-packed. So let's pull up your screen to look at how the Nifty constituents have performed and what it's looked like. So very clearly, the story over here in L&T looking like a big mover right towards the end. I would say L&T about 2.5% up. Adani Ports, but the story truly is about the IT pack, whether it's TCS or whether it's Infosys, LTI Mindtree, all of them having a field day, and that's heartening ahead of result week, which comes in towards the end of next week. Thursday and Friday are the big days when you'll see them actually bringing in their numbers. What have been the themes so far? The finance segment or banking stocks feeling the heat, leading with HDFC, though HDFC has not ended too badly after all of that. HDFC actually has recovered from its lows and from the kind of pressure it felt. Business updates are going to continue to lead the theme going into next week as well. And look at HDFC, it's down less than 1%, but it was over 1% down, 1.5% down at some point. So not too bad over there. Let's look at the indices if we can and see what has performed. We know that IT has been up, banks have been down. Look at the Nifty IT up about 1.5% today. Infra, auto story is looking good. Realty has kept up, not as big as the 6% move on that index as yesterday, but they've been keeping up. The PSU banks are the ones which have gotten beaten down the most. So that has been the big story. On the mid cap and the small cap segment also, a sort of a tepid close, but you have to look at it through the day. So I would say range bound largely, a bit of care and caution there in the markets. But overall, a positive mood. Some very smart movers through the day, and especially during the end. Realty sector, the power pack, all of them seeing a huge bump up, and all on news flows, order flows, MOUs. So MOUs don't necessarily translate into something concrete at the end of it, but definitely a market that is willing to buy on positive news. And you have some of those stellar performers on your list, Hersh.
Well, yes, absolutely. Let me flag off that the Nifty mid-cap, Tamanna, has recovered in line with the benchmark, up around 0.25%, largely led by the likes of an Endurance Tech, a Trident, an APL, Apollo. Endurance, of course, very strong volumes on the back of a block deal which has happened. But talking about the Nifty small cap as well, largely, we've seen that one has stayed in the green through the day. except that small blip that you see. Other than that, it's been in the green pretty much all through the day. And again, the recovery from the bottom looks extremely interesting when we're looking at that chart there, Tamanna. But 0.75% higher as we speak, so nothing to complain about as we enter the weekend. We have the likes of an Alok Industries, Spark, Finolex Pipes, Electra, all of which are up anything between 8 to 20%. Alok Industries hit that upper circuit. So therefore, it's a week where we can't complain, Tamanna. It's been a great week.
You've closed Nifty over 21,700 for what it's worth. Nifty has closed over the 21,700 mark at 21,710 at the end of it. So it's definitely not been a shabby week at all for the markets. But we'll have to wrap it here. So we want to thank all of you viewers for joining in.
And Nagaraj as well as Avinash.
We thanked him before we went into the market close.
Sure.
So they have been well thanked.
Okay.
We can thank each other and the viewers for joining in, and hope to see you again very soon on NDTV Profit. In fact, after this 2-minute break would be best. We have some exciting interviews lined up.